ESG investing. What exactly is it? ESG stands for environmental, social, and governance, an all-in-one term that captures the essence of socially responsible investing. Environmental considers the impact companies have on climate change, like greenhouse gases and CO2 emissions. Social considers the impact companies have on human rights and working conditions. And then there's governance, which considers business ethics, things like diversity, executive pay, bribery, corruption, and political lobbying. If you look hard enough, you'll probably find issues with any company. But what we're really looking at with an ESG investment is a company that not only manages these factors, but is making them a part of its culture, its strategy, even its products and services. Think of DocuSign, a company that not only is providing better solutions for business agreements, but is also dedicated to protecting forests. It has saved 38 billion sheets in paper wastage since 2003, which would have been equivalent to the cutting down of over 4 million trees. Or someone like Viva Systems, which is now a public benefit company. It creates software solutions for the life sciences industry, supporting companies that are doing clinical research to extend and improve the quality of people's lives. And of course then, the obvious one, Tesla, which is starting an EV revolution that will greatly reduce global CO2 emissions in the coming years. So there's the quick overview. But what's the outlook for ESG investing? According to research published by S&P Global, from March 2020 to March 2021, 19 out of 26 ESG funds outperformed the S&P 500. A total of 330 billion has been invested specifically in ESG funds worldwide, with more than 15 billion pouring into ESG funds in the third quarter of 2021 alone. PwC has even gone so far as to say that 50% of the 25 trillion European fund management industry will comprise of ESG funds by 2025. Morgan Stanley also found that sustainable stock investments performed more than 4% better than traditional stock investments in 2020. But with all that being said, others have taken issue with ESG funds. Forbes pointed out the discrepancies in some of these funds that even contained big oil and gas companies, as well as gambling institutions. This is because ESG ratings aren't just classified by their industries, even if they are damaging people and the planet. There are several other factors being taken into account as well, including corporate governance, data protection, business ethics, and how legitimate the financials are. Many critics have been quick to challenge companies that might just be using the ESG trend as a marketing ploy. So it's a reminder for all of us to screen these funds before diving in. Another point to think about is diversification, or the lack thereof. You don't want to pool all of your investments into a single category like renewable energies or plant-based meats. You always need a decent mix across geographies, small, mid and large cap companies, not just one company isolated to a single industry. So there's a couple of things to think about as investors. But with that in mind, there's still plenty of high quality ethical businesses out there that have potential to outperform. And that's about it for this video. In our next video, we'll be looking at 2 great stocks that we think fit that description. Make sure to check back to see exactly what companies we're talking about, and remember to hit the bell icon so you're notified as soon as it's out. If you're just getting started, you can head over to the free MyWallSt app and check out the types of companies we see as great long-term investments, and see our daily commentary or investing tips. We'll leave that link in the description. We've linked all of our resources that can help you get started investing below this video, so be sure to check them out. Until next time, happy investing.